If you haven't heard already, FHA is reducing the PMI rate. So how does this affect a consumer? So this is going to be taking place in March. So let's talk about it. Let me go ahead and share my screen. And we're going to take a look at one of the articles here that we've got that has come on. This is from Mortgage News Daily. So this came out about a week ago, but I wanted to make sure we got it on video and got it out to clients and friends and family. Go ahead and share this as well. But who it's going to benefit are any buyers that are taking advantage of the FHA programs that are out there. These are loan programs that let you come in with low down payments at 3.5% down and be able to purchase a home with a less down payment. So $500,000 home, for example, you're looking at about 3.5% of 500,000 is, to give you the exact number, 17,500. So that would allow a much more reasonable down payment. Most people think they need 20% down. That would be 100,000, or 10% down, $50,000. This allows you to come in with really about less than $20,000 in down payment funds. So, but with that low down payment program, FHA has always had what's called private mortgage insurance, or PMI. So that's a rate of about 0.85% that's tacked on to the loan payments that you're making that are charged. So now that's been reduced to 0.55. So a $500,000 loan now has, you can save about $1,500 a year in that, because it's about, just 1/3 of a percent there. But let's go ahead and let me share this here. This is the mortgage premiums being reduced. We went from 0.85 to 0.55. This is a huge gain for borrowers. So you'll be able to not only reduce the amount you're paying per month, but what it does is it allows you to qualify. So here's a comment here. In addition to providing overall savings to borrowers, a lower annual MIP or PMI can also help more people qualify for a mortgage. So this is great. This is going to let many people, that even though it sounds minor, this does help you qualify for just a little bit more on a payment. And in areas like the Central Coast, Monterey County, Santa Cruz County, San Luis Obispo County, even the Silicon Valley and Santa Barbara counties, we really see the difficulty for our first-time home buyers really to come in even at the $500,000 price range to $1 million. And this is going to be a great help to many people. So if you have any questions on it, be sure to reach out to us. So what's the total savings, for example? Here's a good example, $467, which is well under our local averages, but let's say 500,000 or so, or 467,000, the median price of December, that's going to save a homeowner about $1,400 a year. So, that translates to about $117 on your payment. So that's pretty good. So that's, that can make a difference on a monthly payment for ones, especially if you're struggling to qualify and or just get that first home. That's so hard for everybody to do sometimes. So anyway, check that out. That's some good information I thought I'd share. Check with your lender. The one thing I did want to note is that this does not take effect. It says the annual mortgage insurance premium reductions are noted in the table below and are effective for mortgages endorsed by FHA on or after March 20th, 2023. So it's coming. It's not in effect yet. If you have an FHA loan in process, it won't help you because you've already opened your file, from what I understand in talking with another lender. So you're still going to look at a little bit higher premium for PMI. So that's as of March 20th, 2023, that will take effect. So keep an eye out for that. And another thing I wanted to share, if you bought your home maybe more than 2 years ago, it would be a really good time to call your bank and request for your PMI to be removed. So having that insurance removed now, you should be able to, most homes, if you purchased them over 2 years ago, have appreciated enough where you may have 20% equity in that home. So definitely make a call to your bank, get rid of that PMI. It will cost you. You may have the options, depending on the bank, they'll have a fee for it, of course. You may have to pay for a broker price opinion, which is, depending on your bank and what they'll charge you for it, or you can pay for an appraisal. So either one will work, and either one will get you a valuation on your home today, and then they'll compare it to what it was when you purchased it. And if your home has appreciated enough where you now owe 80% of the value, for example, if you purchased a home 3 years ago or 2 years ago and it was valued at 600,000, let's say, let's go ahead and just calculate that. So if you purchased it at 600,000 and you're paying that PMI, you divide, let's go ahead and share the screen here. Let's do that calculation together here. Let's see here. So if you owed 600,000 on your home, did I share the right screen? Make sure you got the right screen here. Here we go. I'll share this one. So if you started with a $600,000 loan, let's say, and you're looking for 80% appreciation, so you want to take that divided by 0.80. So if your home is now valued at 750,000 or more, it's quite likely that your bank will remove the PMI. So most homes, if you purchase, at least on the Central Coast, it's fair to say, on our Central Coast, anywhere between Santa Barbara and Silicon Valley, you purchased that home a couple years ago, you most likely will be able to get that PMI removed. So your bank, sometimes they'll do this right on the phone with you and order that appraisal, and then you just let the appraiser come through, pay the fee, and then boom, they will send you the approval on that to get that removed. So be sure to reach out to your bank or whoever your loan servicer is and get that PMI removed. So there's a couple of good points for PMI for this week, some good news on that. So I always like reporting on good news. So be sure to like and subscribe, follow me, hit the notification button for future updates, and we look forward to seeing you either on Instagram or TikTok or here on YouTube. Thanks again.